Hello students, in this video we are going to discuss one full-fledged example which is very important for your exam point of view. It can be asked for 5 marks or 10 marks or 12 marks. Now Ganesh has three houses, all of which are self-occupied. Particulars of houses for previous year 2021-22 are as under. Municipal valuation per annum 3 lakh, 3 lakh 60,000 and 3 lakh 30,000. Fair rent, standard rent, date of completion and purchase is given 31st March 1999, 2001 and 1/4/2014. Municipal tax paid during the previous year 12%, 8%, 6%. Interest on loan for repairs of house property during the current year 55,000. Interest for the current year on loan taken in July 2015 for purchase 1,75,000. Compute Ganesh income from house property for assessment year 2022-23 and suggest which houses should be opted by Ganesh to be assessed as self-occupied so that his tax liability is minimum. Let us first calculate income from each house property, assuming that they are deemed to be let out. Means computation of income from house property of Ganesh. So let us start calculation. Now first of all you have to find out GAV. Means this is all three houses, which is first what we will do it, we will consider all the houses as a DLO, deemed to be let out, because all the houses are self occupied and it is more than two houses. Means now you have to apply the option. First what you have to do, first you have to treat all the houses as deemed to be let out property, and then in next step you have to assume that all the houses are self occupied, and then you have to do the permutation and combination and suggest the best possible option for the assessee so that he can get maximum benefit. So let us start the calculation by assuming that all these houses are deemed to be let out property. Deemed to be let out is equal to let out only, means you are assuming it is as a let out property. Now GAV in case of deemed to be let out property we already discussed in one video. GAV is equal to ER, because here ARR is not possible because actual rent received is not there, because it is, you are assuming that it is deemed to be let out. So higher of MV or FR, whichever is higher but subject to SR. So here in this step you will get the answer. MV is 3 lakh, FR is 3 lakh 75,000. So higher is 3 lakh 75,000 but subject to SR 3 lakh 50,000. From these two you have to find out the lower one. So that is the answer 3 lakh 50,000. From these two you have to find out higher one. So this and this you have to make comparison. From these two you have to find out lower the amount, and we already discussed on one video MV or FR, whichever is higher from these two, 1 and 2, you have to take higher value, and that higher value, this is the higher value, you have to compare it with SR 3,70,000. Now in this two value you have to take the lower value. So lower value is 3,60,000. So now again third one, MV is 3,30,000, FR is 3,80,000. So you have to take higher value. So higher value is 3,80,000. Now you have to compare with SR 3,75,000. Now you have to take whichever is lower. From these two you have to take whichever is higher. So 3,80,000 and 3,75,000. So answer is 3,75,000. So this is your ER for all the houses, and ER is equal to GAV. So your GAV is this. Now from this you have to deduct municipal tax paid by owner during the previous year. So it is, the answer is given, municipal tax paid by during the year 12%, 8% and 6%. Now it is given in percentage. So what you have to do, you have to make percentage of which amount. So you have to make percentage of MV, municipal valuation, and municipal valuation is given in for each houses. So for first house municipal valuation is 3 lakh. So you have to make 12% of 3 lakh. 3 lakh into 12 percentage. So you will get 94,000, sorry, 36,000. In second case 3 lakh 60,000 into 8%. You will get 28,800. In third case you have to do 3 lakh 30,000 into 6%. You will get 19,800. So if you deduct municipal tax from GAV, you will get NAV, net annual value, 3,14,000, 3,31,200 and 3,55,200. Now less deduction under section 24 at number 1 A 30% of NAV. This is standard deduction. This is also called 24A standard deduction, and it is 30% of NAV. So you have to make 30% of 3,40,000, 30% of 3,31,200, and 30% of 3,55,200. You will get 94,200 first case, 99,360 in second case, and 1,06,560 in third case, respectively. Now interest on borrowed capital, that is given for first house, it is not given, so nil. For second house 55,000, and property is laid out, so full amount is available as a deduction, so 55,000. In second 1 lakh 7, third one 1,75,000. So what is your income from house property? 2,19,800, 1,76,840, and 73,640. Now let us assume that Mr. Ganesh can opt to treat any two houses, the above house property, as self-occupied property. Now we are assuming that these houses will be treated as a self-occupied property. But for that we have to do the calculation. Now if you treat all the houses as self-occupied property, in that case, in house number 1, house number 2, and house number 3, you have to treat house 1 and 2 and 3. So your is NAV is nil. In all the cases your NAV is nil. Now less interest on borrowed capital, you will get only one deduction, interest on borrowed capital. So here there is no interest on borrowed capital, so nil. So house 1 answer is nil. House 2, you have taken loan. Now here for house second, interest on borrow loan is taken for interest on loan for repairs of the house property during the current year, and it is 55,000. So in that case, if it is a house property self occupied, the limit is 30,000, that is available as a deduction. And interest of current year on loan taken in July 2015 for purchase, in this case maximum limit is 2 lakh, so that is why 1,75,000 is fully available as a deduction. In third second house, maximum deduction is 30,000, which is permissible. For house 2, 1,75,000 is available as a deduction. So what is the income from house property? For house 1 nil, if property all the property is self occupied. House 2 30,000 negative, and 1,75,000 negative income. So this you have to keep in mind. So for house 1 nil, for house 2 30,000, and for house 3 1,75,000. Let us first calculate income from house property, assuming that deemed to be laid out property. We have done that. Now Mr. Ganesh can opt to treat two houses above house property as self-occupied property. Now let us say option number 1. House 1 and 2 is treating as self-occupied property, and house 3 is deemed to be laid out property. If house 1 is self-occupied property, then I already given you idea, its income is nil. For house 2, if it is self-occupied property, interest deduction restricted to 30,000. Interest is total 55,000. It is given in the example, but it is restricted to 30,000. It is 30,000, 55,000, but it is restricted to 30,000. So that is why 30,000 negative income is there for second house, and house 3 deemed to be let out. If it is deemed to be let out, means you have to consider these as a income. So 73,640. So if you make plus of this 3, then your income from house property is 43,640, because this will be deducted, 30,000 will be deducted from this amount. Now this is the, if you treat house 1 and 2 as a self-occupied property and house 3 as a deemed to be let out property, then this is your answer. Now let us consider option number 2. House 1 and 3 self-occupied and house 2 deemed to be let out property. In that case, house 1 self-occupied property nil, house 2 deemed to be let out property 1,76,840. That means now you are treating house 2 as a DLO. So now this is you are taking as a your income in second option. And house income for house 3, it is self-occupied, and self-occupied means your income, if it is self-occupied property, then you are paying how much interest on borrowed capital if it is self occupied property 1,75,000. So this is 1,75,000 that you are paying. So this 1,75,000 is available as a deduction. Now, so 1,75,000 minus. So what is your total income? Income from house property 1,840. So first house nil, second 1,76,840 that is given if it is DLO, it is SO, and now this is also SO, self occupied property. So what is your income from house property in under option number 2? Under option number 2 it is 1,840. Now option number 3, first house is self-occupied. If first house is deemed to be let out. If it is deemed to be let out, you can find out. First house is deemed to be let out. Then what is the income? 2,19,800. So that you have written here. Second house is house 2, SOP. Interest deduction restricted to 30,000. And house number 3, SOP. Total interest deduction of 2 SOP restricted to 2 lakh. Here 55,000 is available, but interest is deducted, restricted to 30,000, so only 30,000. Here, so if you make 30,000 plus for second house 1,75,000, what is your total interest? It is more than 2 lakh. But as per the rule, what is the total deduction in case of SOP is available? 2 lakh. So now in this case, what is your income? Total income from house property 19,800. So now which option is better for Mr. Ganesh? Option number 1 where income is 43,640. Option number 2 where income is 1,840. Option number 3 where income is 19,800. So your answer is option number 2 is the most beneficial. Why? Ganesh should opt to treat house number 1 and 2, 3 as a self-occupied and house number 2 as a deemed to be let out. Income from house property is 1,840. And why it is so? Because if income from house property is lower, then he has to pay low amount of tax, and low amount of tax means it is his benefit. So as a person, we should suggest him to choose that option in which his income from house property is lowest. So in that case, how option number 2, his income from house property is lowest. So that is why we have chosen that option. So house 1 and 3 will be treated as self occupied property and house 2 will be treated as deemed to be let out property. And from this option, what is the total income? 1,840. So that is the answer. By if you do this all steps, this can be asked as 12 marks. And in combination of this, one small example come for pre-construction period that we had discussed in earlier video. You can find out the link in I button of pre-construction period, how to calculate interest for pre-construction period. So you have to do the practice for the same, so to get maximum mark possible. So thank you very much, students.